Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 17th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data today, nothing really market moving. We did have building permits come in line with expectations, but building permits just means you're pulling permits. It doesn't mean you're actually going to build. So moving on to PPI came in a little bit higher than expected. Core PPI also a little higher than expected. And housing starts came in lower than expected. Capacity utilization was a little bit higher than expected, and industrial production was higher than expected. So it looks like we're getting a bit of a manufacturing pickup going forward. So we'll have to see how that affects the rest of the ISM numbers coming in, whether or not there is more confidence in the overall economy or if we're really slipping into a recession. This next one is going to be the one that really dictates that. All right, so we have the NASDAQ right here. As you can see, the E-mini NASDAQ, which is /NQ, up about 80 points right now. Everything really rallying hard after just 3 days ago, people were wondering if the sky was falling and we were really going to be in a death spiral. As you can see here, E-mini S&Ps, which is /ES, pushing up higher. Keynote right here, 1939 is going to be a pretty major resistance area. We'll have to see if we can get through that. Some people are calling around 27 or something, between 27 and 47. So that 39 is my number, if you will. Looking at intraday chart of the E-mini S&Ps, as you can tell, there really hasn't been a downtick for all intents and purposes, and just driving higher, up 32 points on the day, 1921. So it's still about 20 points away from my resistance area that I just talked about at 1939. A couple of trades that I've done or taken off. For the most part, I haven't added a whole lot of trades for the most part, but I do take off Amazon, and I took it off yesterday, so you can probably do it a little bit better today. And I took off the March 425 puts that I sold several days ago, and sold them for $7.70. And the market, with it just rallying, it was really straight up. So I just let that one run and covered it for $1.90. So a lot better than 50% of my max profit. Usually I try and cover naked strategies like that really quickly, but I wanted to really see some volatility come off, and with the market just rallying and Amazon ready to take over the world, it seemed like a good time to get out of that. But I think there might be a little bit of a pullback, and if there is, I might add some more to that position. TLT, put this on a few days ago, and rather be lucky than good. I talked about this with the bonds, and the bonds, I said, it looks like they've shot their brains out. May have a bit of capitulation in there, and that's when I put this trade on. And I had on the March $136, 140 call spread. Originally sold it for $1.01, bought it back for 26 cents. Looks like I just got my Yahoo trade. But anyway, so going forward, probably covered that a little bit earlier, but for 26 cents, I didn't really want to risk it. On to Yum Brands. Yum Brands just has been rallying, so I've gotten lucky. I've ridden this down against me, and it's finally come back, so that was nice. And I had on the March 62.5 put spread, and I originally sold it for 79 cents, bought it back for 32 cents. So I did take a little bit of heat on that for a while, and this last few days of the rally and the volatility contraction has been the saving grace. That's what I talked about. Stay the course on these. Wait for it to work out in this volatility contraction, because that's where you're going to make some of your money back. And again, same thing with Adobe. It was taking some heat for me for a little while, and I had on the March 67.5 put spread. Originally sold it for 64 cents, bought it back for 31 cents today. And 50% of my max profit's what I'm looking for on these for the most part, and I've taken some heat on them, so I'm definitely taking them off now. A couple of trades that I've added today, and that was potash. So you guys know I've been playing back and forth with potash. It's had a nice big rally today, and it's going to be bumping up against this resistance area, and decided to throw a trade on in there, and did the March 17-18 call spread, sold it for 35 cents. So that one's pretty tight, but the 17 area I'm thinking is going to act as a pretty good resistance area for that trade as well. Potash is POT. On to McDonald's, I've covered a lot of my long deltas, added a few short deltas, so therefore I needed to probably add a little bit of long delta to my portfolio, because I'm getting really short deltas, which means I'm short the overall market. And with the market really rallying and no real sign of it abating, I needed to add some long deltas, and I did this in McDonald's because the overall market's up, McDonald's is down big off of no real news. So I decided to take a shot with this one and did the March, sold the 110 puts for $1.06 on that one. I don't know why McDonald's is down as the broader market is way up, and decided to take a shot with that. It could just be a little bit of profit taking going on. So I'm hoping this is just not just a bear flag that's going to fall off for me, but I don't think it's ready to come down here and cover this gap, because they've had pretty good earnings so far. So everything looks good there. It just seems like there's a bit of profit taking going on in there. All right, Friday's webinar, we're going to be looking at doing Condor and building condors around this. We're going to do a several part series on it, so stay tuned for that. You can go to protraderstrategies.com and sign up for that one. Last one, if you're new to trading, or you've been around trading for a little while but want to get a little bit more in-depth knowledge on volatility and how that affects your overall premium strategies, that's a really good one. And especially right now with super high volatility, if the market continues to go up, it's a great time to be selling vol, because that volatility is going to contract and you're going to be able to make your money there, even if you're directionally wrong. Say for instance you sold a call spread and that volatility really contracts, but you're directionally incorrect. That volatility and theta coming out of those trades right now is going to be a nice way to take advantage of vol crush. All right, so go to Pro Trader Strategies, check all those out, and that's about all I got for you today, other than if you can't take that, take it easy.